Hey gang, this is Dave Littlejohn from Littlejohn Financial Services, and I'm coming to you it's July 10th, and we haven't had a episode of the stuff about money they don't teach in school for a long time, so we're way overdue. We're going to be picking that back up, and I realized we've got 5 days until some deadlines because 2020 made retirement plans all weird. There have been a bunch of changes, and so I'm just going to take a quick second to go over those and remind folks that we've got some deadlines that are going to be relevant to you. So let's check these out here. First and foremost, we moved some dates, right? If you are unaware of this, you have until the 15th of July to contribute to an IRA for 2019. So that was last year. And once that comes and goes, then the deadline is passed. So that's how long you get. Normally it's July 15th. It's normally tax day. But because of all the COVID virus stuff, we pushed it out for an extra 3 months or whatever it is. So anyway, July 15th, that is next week, I think Wednesday or something. So it's right now. It's not too late, but get on it if you're going to do that. And that's for both Roth or traditional IRAs, or if you happen to have a SEP IRA, same story. Okay. Also, we moved some other significant dates. If you happen to be somebody that was approaching 70 and a half or older, we changed the required minimum distribution dates. I say we, Congress, and they changed the required distribution age to 72. So it gives you a little bit longer before you have to take money out of a retirement plan. Here's the catch. For this year, no required distributions at all. They just said none. And we could discuss, is that good, bad, or otherwise? But look, you don't have to take money out of retirement this year if you don't want to and you are otherwise of a required distribution age. And I'm going to tell you this also. If you're wondering and you've got questions about this, everything I'm sharing right now is intended to be sort of generic in nature about how it works. Please contact a tax professional for your specific circumstances. All right. Anyway, moving on. The other thing that we've changed is, now you don't have to take the required distributions for 2020, but so that was, I guess that's the same thing, right? We had the back up, right? Required distribution age moved to 72. You don't have to take them at all for 2020. What else did we change? Some of the rules. These are kind of a big deal as well. For example, because of financial hardship of COVID, normally if you take retirement distributions before age 59 and a half, not only do you have to pay taxes on everything, you also have to pay a 10% penalty. That penalty is waived this year. You can take money out and it's not going to count. And here's the other wacky thing. You can pay your taxes over 3 years. That is a new deal. So 3 years instead of paying it all in the year that you take it out. And the fun one, normally you cannot do this with an IRA. You can pay the IRA back for up to 3 years. So if you take money out for up to $100,000 out of an IRA, if you put it back in within the next 3 years, you can then file to amend your previous tax return and they will undo the distribution and you will get the taxes back. So a lot of flexibility in planning if you're in financial hardship and need to take distributions from a retirement plan. Again, see your advisor to get all that dialed in. And if you don't have one, call us, right? Also, we changed some rules around 401ks. If your 401k plan allows plan loans, they changed the limits on loans. So it used to be $50,000 or 100% of your vested balance. That's basically doubled now. So instead of a $50,000 loan, you can loan up to $100,000. Clever thing about a loan, it's not considered a distribution, right? So you can take the money out and then you pay it back and you can pay yourself interest when you pay it back. The money is not growing in your account when it's in there if it's invested, but at least it's not considered a taxable event until you either close the 401k or roll it over, at which point then you have to pay the taxes. So loans can be a flexible planning tool. I will admit, I'm not crazy about them. Oh, look at that. We have a Microsoft thinker. Thanks for the getting all over on our screen there, right? But anyhow, that's the deal with 401k. So if you're eligible and your plan offers loans, that is a potential option as well. Next, we've got the funky COVID qualifying rule. When are you allowed to take these distributions and not pay penalties or stretch it out over 3 years and so forth? Well, the rule is if you were affected by COVID. And it's pretty broad. You can see on screen some of the issues. Did you have you a reduction in hours, or did you have to have a kid that was a student and you're at home being a parent and a teacher at the same time? So you had childcare issues, your business was closed, or any of those. Basically, a pretty vague definition. But if COVID was what affected it, then this is something that you can look at doing. All right. And then finally, a biggie that was changed, and this one is less about. This is a planning rule that I think a lot of folks don't realize. But you know, if you are inheriting money from an IRA, it used to be that you could stretch your provision, stretch the the benefit out. So you inherit money from a retirement plan, you could pay a little bit over time and only pay the taxes as you took the money out. It was called a stretch IRA provision or a stretch retirement provision. But now the money is required to be taken out in 10 years or less. So this creates some interesting planning motivations. If you're somebody that has a retirement plan and you want to try to maximize how much you give to your heirs, there's a potential opportunity for maybe a Roth conversion or something like that. Very much dependent on your personal circumstance, but nevertheless, that is a big deal. That was a change on this one. So most of the other rules are still pretty much in effect and the same as they've always been, and including the contribution limits. So for this year, you put $6,000 into an IRA, and if you're over 50, you can add an extra $1,000, so that makes it $7,000. SEP IRAs have other limits and so forth, but those are the big ones. And remember, IRAs, in this case, it's either Roth or a traditional IRA or any combination thereof. So you could have $3,000 in a Roth, $3,000 in a traditional IRA. The total is $6,000, and if you're under 50, that's your amount. Okay, so those are the biggies. Is you get your contribution limits, and then I have to do the usuals in disclosure. Guess what? This can all change. So if you're watching this video, it was filmed on July 10th of 2020. What a year, right? And at this point, these are the rules as we understand them. Congress has changed stuff and they reserve the right to do so. And I have to say then, this video shouldn't be viewed as personal advice. Please go and confirm for your circumstance. But at a high level, now you understand what's going on. And then, of course, if there's something that you personally need help-wise and you do need that individual advice, please contact us. This is our actual phone number online, right? So if you call it, it rings the office, 541-375-0898, the actual email that goes to the team. And you can go get more information at our website. Also, comment, click, whatever you need to, like if you want to get more content like this. But that tells YouTube that you like it and it encourages us to make more videos like this. So anyway, this has been the stuff about money they don't teach you in school. This is the stuff about IRAs that are a moving target right now. And as always, not to be considered individual advice. If you need that, give us a shout on the numbers there. So thanks, guys. Until next time, this has been David Littlejohn signing off. Take care.